This week's Talk of the Town in real estate has been all about Canadian real estate facing the worst market since the 90s. Canadian real estate is facing some of the worst market conditions in decades based on CIBC's latest research paper, which warns investment has disappeared from the market. Now, the Greater Toronto condo market appears to be where most of the problems are currently. 2/3 of buyers are investors. The other concern is a weak condo resale market where inventory is rising and prices are falling. On top of that, developers aren't very enticed to starting new projects, and some have actually slowed down their current projects. Benjamin Tal has mentioned that we are facing the most significant test since the 1991 recession. Who was around for that? I was, and I'm sure many of you as well. Now, the Greater Toronto real estate typically builds condos and low-rises. The low-rise market seems to be doing fairly well. However, condos is another story. Investors are most of Toronto's condo demand, and they aren't buying right now. So Benjamin Tal also mentioned that the condo market is clearly in a recessionary territory. The investors in the pre-sale market, which have made up to 70% or more of buyers, makes the situation more challenging. Higher interest rates, a weak economy, and stagnating prices aren't exactly a prime investment environment. Many investors have negative cash flow units. The math just doesn't make economic sense from both the demand side, which is the investors, and supply side, which is the developers leaving the market at a standstill. Now, as a result, new condo sales are at their lowest level since the late 90s. For condo investments to regain its appeal, we have to wait for resale prices and rents to rise faster and interest rates to decline more significantly, says Benjamin Tal. Until this occurs, the incentive to build will fall further. He warns this could exacerbate the affordability crisis, making it significantly worse. So, how did we get to here? The gap between what end users can pay and what investors were paying is just too wide to close. So the policymakers' attitude is to just build more to bring down prices, but that's not going to work. Developers still face the elevated building costs and they don't have much wiggle room. So the other side is the purchaser, where it is someone who is purchasing for themselves or an investor. With the current high interest rate, not too many people are considering purchasing at this point in time, especially if you are a landlord. Pre-construction condos that are pre-sold is currently less than 50%. This is a 20-year low. So projects require at least 70% pre-sold to begin construction. This slowdown will affect any further construction. Last week, the Bank of Canada announced another rate of 0.25%. Although it's going in the right direction, it's still probably not enough. There is talk of them perhaps dropping it by 0.5% by the end of the year. That would make a full 1% in 2024, and that should make a bit of a difference. Take care.